Welcome to etvFutures.com. Today is Thursday, December 13th. I'm Caitlin Sisney with your Commodities Open. Crude oil fell more than $1 a barrel on doubt that central banks will be able to prevent an economic slowdown by adding cash to the financial system. Crude oil is trading at $92.77 per barrel on the NYMEX. Natural gas in New York advanced after a government report showed the U.S. supplies last week declined more than expected. Stockpiles fell 146 billion cubic feet to 3.294 trillion cubic feet in the week ended December 7th. Natural gas is trading at $7.44 per million British thermal units. Gold futures dropped nearly 3% to trade below $800 an ounce, coming under pressure as the greenback gained against most other currencies, lowering the investment attractiveness of the precious metal. Gold is trading at $807 per ounce. Meanwhile, silver is trading at $14.445 an ounce. Today, we're joined by John Kilduff from Man Financial. John, what is your outlook for the commodities market?
Well, Caitlin, this morning the volatility in energy prices, in particular in the commodities across the board, is persisting. As we continue to digest the back and fro over the economic outlook and the monetary responses that have been going on from the U.S. Federal Reserve and yesterday's coordinated central bank intervention on an international basis, relatively unprecedented, as you've been talking about. We haven't seen something like this really since September 11, 2001. Crude oil prices are under pressure this morning as some of the enthusiasm over the potential for the global economy to be stoked by the monetary moves yesterday comes off the rose here. We are seeing pressure now on across the board as the renewed worries over the economic performance, particularly for 2008, overtakes market sentiment once again. Despite what we still see as a bullish underlying fundamental situation in terms of supply barely able to keep ahead of demand overall globally, as we even forecast in 2008. Today's natural gas inventory report was mildly supportive, at least initially, but $7.50 on natural gas is proving to be a formidable overhead resistance point. We ran right up into it and promptly sold off, despite some weather that should be supportive for the complex and natural gas prices as well. Consumers are continuing to slow down their purchasing at the pump, and also some of the up and downs on the weather is helping to be a moderating factor on heating oil prices. In the rest of the commodity complex, we see gold also being very volatile, reacting to inflation numbers, reacting to the central bank moves that I referenced in regard to the energy complex commentary. And overall, we're seeing copper also get hit on the economic worries, as well as some of the agricultural commodities. So overall, the sentiment today has to do with a diminished economic outlook once again. However, as the data points continue to come out here, I would look for the volatility to persist, but with an upside bias into the end of the year, especially for energy.
Thanks, John. That was John Kilduff from Man Financial. I'm Caitlin Sisney. Join us again for another update right here on etvFutures.com.